Come on, people, we got to start buying more burrito bowls so the stock can start going up. In today's video, we're going to be taking a look at Chipotle. As you can see, it's down 25% in the past year. So we're going to take a look at some of the financials and see if it'd be a good investment to add to our portfolios. Now, if you've never heard of Chipotle, please, I really beg you to know what Chipotle is and go try it out. In my opinion, it's one of the best fast food places to go to. And they currently are trading at a PE ratio of 36, which is one of the lowest it's been in its history. And the market cap of the company is about 55 billion. If we take a look at the PE ratio of Chipotle throughout its history, we can see that right now it's undervalued compared to the past 5 years. And when I say undervalued, I mean cheaper compared to the stock price to the EPS that it was making. Not only that, if we take a look at Chipotle's current price compared to this EPS, as I've spoken about before in the channel, usually the stock price tends to follow the EPS, as you can see. But for some time now, Chipotle has been dropping even after making and increasing its EPS. So this is one of the main reasons why I'm taking a look at the stock to see it be a good add to my portfolio. Now, if we take a look at this chart, this is pretty much Chipotle's revenue. As you can see, the company is having no issues growing their revenue at a 3, 5, and 10-year average of 14, 15, and 11% KGR. And that is almost the same in terms of growth for every single metric in the company. Its operating income, which is important, is growing. Its net income, its EPS, as we just saw. And now take a look at this chart for Chipotle's cash flow. Actually, let me rephrase that. Take a look at this chart for Chipotle's free cash flow, okay? The last value was 1.5 billion. Take a look at this chart, how crazy the cash flow is glowing. Their 3 years, 5 years, and 10 years KGR is 22, 31, and 13%. I mean, this is looking very healthy, especially for a company that constantly invests in new locations and they have this much cash flow. They're doing something right. Now, just to give you an idea and compare it to some of their competitors, as you can see, there's not really many that have the same numbers as Chipotle, except Darden restaurants. But if you take a look at a company like McDonald's, for example, their KGR is 5, 15, and 5% compared to Chipotle's 19, 32, and 12. Now, again, we did mention that they open a lot of locations, but this is a good thing. It's compared overall, they have 9.3 billion in assets and only 5.7 billion in liabilities. Now, keep in mind, guys, when I go over stocks, I'm not a crazy financial analyst. Obviously, you guys know that. So I try to invest based on decent numbers and logic. Every time I walk into Chipotle, it's completely full and I have to make a line. So that tells me people like it and they're making sales. And then not only that, when I take a look at the numbers and I see the revenue, the EPS increasing, it just confirms the thesis. Obviously, you can't just invest in a stock because of that. You have to look at other things to see its current value. But let's keep taking a look at the numbers. Now, they have a great gross margin of 31% and every other single metric is in the green as well. So this just keeps letting me know that maybe I want to invest in this company. However, I haven't made that decision yet. Now, these are the analyst price targets for Chipotle. As you can see, the average cost is that the stock will be worth about $60. The highest will be 76.65 and the lowest of 46.46. And they also have a stock buyback yield of 2.18%. However, when I go to my calculator, my intrinsic value, and I type in Chipotle with a growth rate of 14.1, which is what analysts are expecting, as you can see, in Graham's original formula and the updated and the revised analyst formula, this stock is still not a buy. And even then, I like to buy stocks with a margin of safety with 35%, which I know some people think is way too much. But for me to buy this stock, it should be somewhere between the $23 mark. I know the stock is not going to go back to $23. At least I don't think it will. But as you can see, the intrinsic value of the stock is 41. And again, I also don't think this is very accurate. Just based on the stock free cash flow, the revenue, and the EPS increasing constantly. But I think right now at the price that the stock is at of $41, I think it's still a little bit expensive. My ideal situation is for the stock to go to $32, $35. Will it go there? I don't know. So I might just start buying it around the $40 mark and then start averaging down if that is the case. But that's just the plan for now. Let me know in the comments below what you guys think of Chipotle. Do you think it would be a good investment, or what are some concerns that you see for this company? If you enjoyed the video, please consider leaving a like. Don't forget to subscribe. And as always, I'll see you on the next video.